Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday the 9th day of December 2014, and this is the daily report for gold and silver. Tremendous upside move in the precious metals markets. First to gold currently trading at $12.30.40. Now that puts it up roughly $25, $26 on the day. The high $12.40.50, the low $1200 even, 0.30. And as I said, currently trading up a little bit over 2% on the day. Silver also tracking higher, actually up over 4% on the day, above 1703. That's our current print. Now the low 1623, high 1733. Silver, interesting story developing here. More on silver at the end of the show. No doubt a tremendous move to the upside as we see precious metals surging today. Oil up a little bit, stock market down, dollar down. We'll talk about the relationship and all of those in a second. First, to make some sense out of this move in terms of a technical basis, I draw your attention to our daily chart that we have up here. We have one basic fib retracement. Now, this fib retracement is from this high up here, which is 1346. We had been looking at the more short-term relationships, but to make some sense out of this, we really have to move up to the 1346, which was one recent top before the decline right in here. Of course, the market comes down, tests this 1180. This is that second of the triple bottom, and then comes up, only trades to about, call it 1241, I believe that was. Now, interestingly enough, when we do that, and let's go ahead and compress this just a little bit now that you have seen that, so you have a better sense for what we're looking at. But once we do that, we notice something real interesting. And what we're noticing is as follows. When we create our basic fib retracement from 46 down to the bottom of 31 and create this particular counter wave, this counter trend here, you can see that 1238, that is our 50% retracement, and that is pretty much where we see the high going on this particular chart, this being a daily chart of a continuous contract of COMEX gold. Now, typically on a counter wave, and this is why I bring this to your attention, the real question we're asking ourselves is this, over the last couple of days, was whether or not we've seen a bottom in place. And when we consider the fact that we've had this kind of a move, meaning $100 off the low, it is something that is now holding some weight. However, on the bearish side, and we want to present both sides of the fence, so to speak, let's assume for an instant that what we're looking at is a counter trend, meaning that the trend is still predominantly lower. What you would get on a typical counter trend, you've got this market move down, and when you consider the size of the move, 1346, 1246, almost a $200 move, or a $200 move plus, I should say. As we look at this, we had really a 50% rise, and typically what you get on a counter wave is, as we've talked about on many occasions, you get what I call that sweet spot, and that sweet spot tends to be anywhere between 50% on the low end, we've absolutely achieved that, up to about 75%, that of the prior wave, which was down, which is this wave right here. When we consider the distance down here, we could see a rise continue to move up to about just below 1300, call it 1280, so to speak. In other words, we could see a rise all the way up to this point here, about 75%, and then a move down, and that would still be in the confines of a counter trend in terms of the wave itself. Now, in terms of the bullish aspect of the market, there can be no doubt, and that is we have risen roughly $100 off of these lows. And what I'm doing now is just simply adding a little bit of data to our existing chart so we can fill that in a little bit better and really kind of compress this so we can really put this in relation to where the market has been and where the market is. When we consider and when we have to look at this, we had this the triple bottom in play here. We absolutely broke through that triple bottom to get a new bottom at 1131. Now, until the market creates a new high, and the new high that it would have to go to before we could really, on a technical basis, say we're back in any kind of bullish mode, is this most recent high at 54. Because when we look at this chart, we got a lower low here compared to this. We then got a higher low. This was at 41 here. But as I said yesterday, we've not gotten the higher high. To get the higher high, traders, it still needs to go another $25 to really make some case for a pivotal reversal, meaning going from a bear market to a bull market. These are the more difficult markets to call, obviously, but at the same time, we have set parameters and a concrete set of rules that we use to interpret the data that's coming in. And as I said, there's no doubt we are $100 off. We've seen a dramatic rise today. Whether or not, though, this is a pivotal reversal, and this is actually the bottom of the market, this 1131, and we, over the last week or so, began to postulate, as this market moved up, whether or not that, in fact, is the case. As I said, we really, really need to take out this one area, and as I said, that area is at 1254. Now we can go ahead and really blow that chart back up so you can see what I'm saying, but this is the point that I'm talking about, this particular point right here. But there's no doubt, whether you want to call it short covering, bargain hunting, the fact is that we have bounced off the bottom. We aren't in trading through the holiday season, but there's no doubt we have bounced back up, but we have stalled at a real level of resistance right now, which I am pegging at 1238. No doubt, dramatic move in silver today, up about 4% on the day. Even more impressive, over 1,700. We've been looking at this daily chart, and the thing that really sticks out to me is the fact that this is not this Monday, of course, but last Monday, in which we came back from a 4-day holiday here in the United States. The market opened at 1550. That's this line here on a daily chart. It then went and traded dramatically lower to just above $14 per ounce. You can see that by this tail here. Surged higher, hit this high, but actually closed above 16, almost at 1650 per ounce. Now, the next thing that we noticed in terms of straight observations was that following that dramatic move, we had an entire week of consolidation in the market. In fact, over the last few days, one of the things that we noted was the fact that we were seeing these small bodied candles, and the question that we really wanted to ask ourselves in terms of dramatic moves in the market was, did we find some sort of a top, or are we simply looking at a consolidation before moving higher? Well, in hindsight, the answer is obvious. The market has moved higher. The one thing that you'll notice is I have a line here. It's simply a horizontal line that I added in the market. And you can see this line was here yesterday, but you can see that this is precisely where the top of the market has come to. Now, we really need to compress this chart to get a sense for where this came from. And if you recall from yesterday, I talked about resistance in the market based upon really these lows right in here that came back in 2010. I said that this is an area that we saw. Now, if we carry this line over, that is our technical resistance area, just at around $17 per ounce. And you can easily see that it has come right up to that line. Now, with that in mind, you've got the next level, which is a fib retracement level at about 18. And now we can go ahead and kind of uncompress that chart. Now you can see where this line actually comes from. And so it does make sense on a technical basis why the market stalled at this point. The real question to me is a move above this and finding some sort of base is a real bullish statement for silver. We have to trade above it. We have to close above it before I can get bullish and say that we saw a pivotal reversal. As in gold, the same thing. We have to break above what was at 1254, meaning make a higher high before I can say we've seen a pivotal point. At this point, we've seen a dramatic rally, a nice rally, but in terms of a technical basis, we don't have absolute confirmation that what we saw was the bottom, but it is looking more and more like that as a real distinct possibility. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. Bye-bye.